Knock, knock, everybody. Derick Van Ness here, investor, wealth strategist, life adventurer, and I've got something new for you today. I want to talk about how the uber wealthy create and sustain wealth for the long term. And this is something that's going to blow your mind. I heard this probably a week ago, and I cannot stop thinking about it. So if you're up for big ideas, smash that like button. Let us know that you love it. Also, subscribe, drop us a comment below. Let me know you're new. I'll welcome you to the family. So let's get into it, right? So it's always been a mystery, like how do the wealthiest people in the world create wealth? And sure, there's guys like Jeff Bezos or Bill Gates who catch the right technology or build a company that becomes huge. But like these families and stuff that have had and owned wealth, created wealth and done it for the long term, how have they done it, right? Not like the latest thing, the flash in the pan, lightning in a bottle, but like if you're you and me and you aren't going to invent the next Facebook, like how do you create wealth? And once you create it, how do you sustain it, right? And I thought this was super fascinating. I was watching an interview with a gentleman named Michael Saylor. He owns a very wealthy company. He's done a ton of Bitcoin investing and some other things. And I'm just always interested in like, how are the wealthy thinking, right? And one of these interviews, he kind of says off to the side, maybe if for a minute or two he explained this, how this happens for people. And it's so simple, it's so profound that I can't believe that I never thought of this before. And he said it this way. He said, the wealthiest people that I've seen in my lifetime who have grown and sustained wealth, and this is a billionaire, he said, they buy pristine assets that are unencumbered and they never sell them. So what does that mean? How do we unpack that? Buy pristine assets that are unencumbered and never sell them. This is his reasoning for buying Bitcoin, by the way, is he feels like it is an asset that's not going to change. It's only going to go up in value. It's pristine and it's unencumbered. But he also gave some other examples. So he says, a simple example is like a city block in Manhattan, New York City, right? Some of the wealthiest people he knows would buy a city block once they acquired some wealth or would work with partners and eventually buy them out. They would get a city block. And here's the thing, value in Manhattan is a premium. It's probably never really going to go down. I mean, under current circumstances is probably the worst it'll ever be. And the reality is right now is probably the time to buy something like this, right? If you're looking at Manhattan real estate. But you could look at coastal California real estate, other really beautiful, amazing places where people will want to live no matter what happens in the world. And you purchase this stuff and then you never sell it. And he says, you know, people ask me, well, how do you create cash flow from that? How do you live off that or whatever? And of course, something like a piece of real estate can create cash flow. But let's say you buy an estate in the Hamptons or you buy coastal real estate, like that may not create a ton of revenue for you if you live in it. But here's what he said. He said, these things are unencumbered. They always go up. So if you need to access cash, you just borrow against it. You use it as the asset and then you borrow against that money and take it and do other things. So how does that apply to you? What if you can't buy a $5 million piece of coastal property? What if you can't buy a $100 million city block in Manhattan? How do you do this as like a regular person, right? And I've been thinking about this. And Michael Saylor, of course, identifies Bitcoin. I think it could be, not quite yet, we're not there yet, but at some point it could be the type of thing that you buy it and it goes up in value. And here's what's really cool. A lot of the apps out there now are willing to give you secured loans against your Bitcoin. So if you own one Bitcoin, which right now is worth about $50,000, you can go and borrow against that cash, take that money, go do other things with it, and then pay the money back as a loan, right? But what that does is it keeps your place in line as Bitcoin continues to grow. Just like a piece of real estate, if you take a loan out, like a home equity line of credit or a loan against a commercial property, you can buy more commercial property, you can live on that money, you can start a business, and then from the profits of that, you can pay it back. But you didn't slow down your appreciation and the upward mobility of the value of that property and its rents and paying down the mortgage and all the other things that happen with that, right? So Bitcoin could be an example, but I have an even easier one, and this is one that most people don't think about because they're totally unaware that this is such a pristine asset. And I'm going to ask you to be open-minded about this, but really it's whole life insurance properly structured to maximize cash value. Now, why would that be a pristine asset and why would that make sense? Because here's the thing. You know for sure you're going to die. So at some point, permanent life insurance will pay out. I do not consider universal life to be permanent insurance. If you don't believe me, go look at my video on universal life. It is super important that you understand that before you put money into it. And if you have money into it, you need to rethink that in your strategy. But with whole life insurance, as long as you make those premium payments, it's guaranteed to pay out. If you fund those types of policies properly, you can build cash very, very quickly, whereas the way that most of them are set up is trash, right? The cash value grows very slow, the fees are really high, it's terrible. That's not the right way to do it, and I don't have time to go into how to structure a policy properly right now, but the thing about life insurance is because it's guaranteed to pay out on your life, there's an asset that's always going to go up. Life insurance also has guaranteed minimum rates of return on it that are 10x, 20x of what you're going to get in a bank account, like really quite a bit higher, or even much, much higher than you'll get in money markets, bonds, or other very safe investments. Plus, they're unencumbered in the sense that they have, if you work with the right companies that are dividend paying mutual companies, they can adjust. The dividend can go up in time. And what can happen with that is as you build cash in those accounts and it goes up, you can borrow against that cash, just like you might borrow against the equity in a house. You can go out, buy real estate, buy other assets, start a business, do other things, and then you can pay it back in. But because the money never came out, there was just a new loan that's secured by the money inside of the cash value, just like the equity in your home never actually comes out of the house. The value is still there. Same thing in life insurance. This is something that you can do where you can have your money growing, keep your place in line on that acceleration of the growth curve, and still take the dollars and use them elsewhere. If you do this properly, if you actually use life insurance with something like real estate, you can get your dollars doing almost 10 jobs at one time. I don't know any other asset combination where you can do that, but it's significant. So I bring this one up because a lot of people ask me, I can't buy premium real estate. I can't buy some of these other premium assets, maybe the rights to a Whitney Houston song or something that's always going to be a classic, right? So how do I get involved with this? Life insurance is one of those things it's guaranteed to go up in value. People aren't going to stop dying. Most of the premium companies that are selling dividend paying whole life insurance from a mutual company have been around 100, 150 plus years in a row. So they have a massive track record. And it's super flexible. You can take that and use it elsewhere. So I want you to start noodling around with this. And by the way, if this is valuable stuff, please hit that like button, subscribe down below, drop us a comment. If you have questions, which I'm sure a ton of you do, please let me know, or let me know how I can help you. But the bottom line is this. If you're not in a position to buy coastal real estate, the rights to the best song that's going to be around forever and ever, a piece of Manhattan real estate, something like that, how do you get in the game? You get in the game through either using something like life insurance, maybe eventually Bitcoin will be something like that, but something that always goes up, it's unencumbered, it's a sure payout for certain, you can totally leverage it so you can get your dollars doing multiple jobs. It's a pristine asset that way. And I want you to start thinking about to yourself, how do I get control of and ownership over pristine assets that I can borrow against and continually get richer every single day, week, month, year, right? Because if things always go up, you're always gaining growth. You're always getting wealthier. And that's the key to the game, is to get the tide flowing with you instead of against you. So my name is Derick Van Ness. If you have some questions about this or want to know more about life insurance, you can check out this video right here. It talks about whole life insurance versus term life insurance, which one of those is best. And we will see you on that video next.